As promised, a question and some commentary on Torque Oil and Gas. Here's Jeff. He's in Yellowknife. Hi, Jeff.
Good day, gentlemen. Hope it's going well for you.
Yeah,
I was just
sure.
wondering about Torque. It's I think I got in around 165, and now after the reverse split, it's up around 13 plus, and it's been higher. Is there any future in the dividend, and is it time to buy a little more or get rid of it? Thank you.
So, Jeff, as I mentioned a moment ago, we have a small basket of these yield-generating energy companies who have made it very clear they have a very friendly dividend policy to their stakeholders. Torque is growing its production nicely, and while doing that, able to grow its dividend. So I think that this is one that you could continue to own because, for one, it gets you into a sector that people really care about right now. And second, it's one of those companies that provides income replacement for people who are looking for alternatives to fixed income. So this is one that I think that you can buy. They've been very effective with their recycling ratio. The number of dollars they put into the ground gives them a multiple of that coming back in cash flow. So I would buy them as a package. Maybe you buy Torque, maybe you buy Whitecap, maybe you buy Crescent Point. But I think they're all names that you could continue to buy.
Next up is Ram in Calgary. And Ram, we always appreciate it, but you don't have to say thanks for the great show. You can just get straight to the question if you can. How are you?
Thanks. I'm good. I'm interested in Yahoo only from one angle, which is that it owns Alibaba, and Alibaba is going to be IPO'd in a month or two. These two stocks, this SoftBank of Japan, which sells at New York, as well as this Yahoo.
Right.
Would they get a bump once that is IPO'd by, say, 30-50%? Would my theory work? Thanks a lot for your opinion.
Okay, thank you, Ram. Or is Alibaba priced into this stock pretty well here?
Look, I think that this is probably going to act like a gold mine coming into production. People have been waiting and waiting and waiting. I think as we get closer, the stock starts to perform a little better. The question is, what kind of lift will Alibaba give them? I don't know the answer to that. I think that there's a lot of questions around that. Stock's been consolidating, again, I think really sort of almost all year long now. And if it were to come out of this range, it probably has a move higher. I wouldn't venture a guess as to how high, but I think you could make a case that there's a catalyst coming. The stock's held in very well. If you compare it against the group, the internet-related companies have all consolidated over the last while. I think the fact that Facebook came with the numbers that they came with in social media and the stock's reacted as it has gives you indication there is a little bit of pent-up demand here in the group. You know, we don't own Yahoo currently. We have owned it. It's one that I suppose you could buy. We prefer Facebook right now.
Well, maybe a quick thought on Facebook. All-time high. What'd you make of the numbers yesterday?
Listen, this is sort of classic. A stock that looks ridiculously expensive, and it's expensive, but very often those companies aren't as expensive as you thought they were because it turns out the earnings are much better than what were modeled in. Facebook is showing that they've got a massive franchise to monetize. Haven't even begun with WhatsApp. They haven't even begun with, Instagram. There's lots of opportunity here. So I know it's expensive. The whole group is expensive. It's one position that we hold in our equity portfolios. But we like to buy things where we can see, based on the numbers, something's changing for the better and at an accelerating rate, and that's what's happening with Facebook.
Okay, a little bonus there on Facebook. Here's Habib as we get to a slightly less sexy sector. Habib's in Toronto. Good afternoon.
Good afternoon. My question is about Brookfield Infrastructure Partners. Is it a buy at this price? And do you think is it a reasonable expectation to have annual return of about 10%, including dividend? Thank you.
Right. So Brookfield Infrastructure Partners is a company that we don't own. We do like infrastructure assets as a sector. I think that you should expect to see total return 8 to 10% over time. It's not a cheap stock, but no infrastructure is cheap these days. Infrastructure is one of those asset classes that did get revalued over the last few years. But I think that this is one that you could put away in the portfolio as a long-term hold. They've done a great job with it.
Do you hold any of the Brookfield entities?
We own some Brookfield Asset Management.
Asset Management. You just said that, didn't you?
Yeah.
Okay, let's take a break, and we'll come back with David right after this.